What's going on, everyone? So I wanted to show you how I navigate through the Webull app, like if I'm looking for a play or something like that. Well, not looking for a play, you know what I mean. Looking at the calendar. So what I do, if I'm the first thing I do, let's say I don't have any positions open, and I want to go and see if there's anything viable to play. So what you do is you go to Markets at the bottom here, go to Explore. You have a 52-week high and low right here that you can utilize at some points. But I usually just come right here to this calendar, hit View All, and there's also a pretty handy calendar up here at the top right that you can click on, and you can actually go by date, so it's not all jumbled up with different tickers. You can actually look back at the past as well, I believe, as far as maybe a week or so. But anyways, I use the calendar, pick a date, look at what's there. We have a lot on the 15th, as you can see. A lot on the 15th. Wow. So, yeah, NMTC's been one I've been watching. So, anyways, you find one that you like. So let's go with NMTC. And then what do we see right off the bat? We see a gap. Now, did this one happen on earnings? No. So there's two types of earnings gaps. Well, I shouldn't say two types of earnings gaps. There's two types of gaps that we're seeing here. Two periods of time where the exhaustion gaps occur. Mid-earnings cycle, like this one, or on earnings cycle. You see how it's about right dead center in between those two E's right there? You got earnings here, you got earnings here. This is where the gap occurred, about dead center. Now, let's go to AGLE to give you another example of a mid-gap play. So right here, we're just now coming out of that middle of the pack. So again, earnings coming up soon for AGLE. And historically, this is a mid-gapper, so that's very critical to pay attention to. Is if you don't see the gap on the E, it's likely in the midway through. So let's go back to NMTC. It's a mid-gap, so that one I would rule out. So go back to the calendar, and let's go to TTC. Zoom out. Nothing apparent. Let's go to jobs. There's one. But this is another mid-gapper. You see how it's a mid-gapper? E, about halfway through. So I'll avoid that one yet. Still trying to figure out those. Rev G, there we go. There's a down gapper on earnings. So they just had their earnings. The gap has been trying to fill clearly. So this one, they're already having earnings again? That can't be right. Oh, that's the 15th of last December. I'm retarded. Anyways, okay, let's start over. Let's go to one that actually hasn't happened yet. Maybe that's why I wasn't finding any. Let's go to January 15th. We only have one this day. Nothing right off the bat. So let's go to the 14th. Ooh, JP Morgan. Any banks? Banks? Of course not. And I just do quick scans. I'm looking for the most obvious ones. If it's not obvious, I skip and go on. Ally Financial, no gap. Liquidity, of course. 18th. PNC, that's another bank. Liquidity. Caro. Nothing there. See how quick I'm doing it? Oh, there's one. Dividend gap, though. That doesn't apply. That's a small one. It's not, apparently obvious, but it's getting up there. Maybe by the time earnings comes, it'll be viable. Let's look at something closer now. So we didn't really find much out at the 15th. Let's look a little bit closer. Let's look at SCHN for tomorrow. I don't want to. I'm trying to do this as an example. I don't want to give anything for tomorrow. ETWO, nothing there. Volt, nothing there. SJR, filled. KBH. Yes, this is literally it. Just over and over again. You go through. That one may not need a gap. CMC. Christian McCaffrey, Tilray, that's a popular one. Damn, all these have liquidity in them, man. There's one. There's one. Okay, AYI. So you see how that, right off the bat, obvious earnings gapper right there. Has it filled yet? Not at all. So if you want to measure the gap tool now, down here at the bottom right, you see a little square with looks like a chart symbol in the middle. Click that. Go to Draw. Measure. And then all you got to do is click the top of this candle here. And if you hold it down, you see how this little little circle came up in the top right of the screen. It helps you get it perfect. So you put it right there on the top of that. And then you put the other tap at the bottom of that candle there. So you can see there that this gap is an 8.67% gap. Not bad. And they had a dividend right after it went up. So that gap's got to be filled at some point. And their earnings is coming up on the 7th. So let's look and see if we get that trend. So this is where the MACD trend comes in. So now that we've seen that there's an earnings gap to the upside that has not been filled, now we come over here and we look at the MACD to try to catch this motherfucking gap. So what do we see? We see the same pattern as before that I showed y'all yesterday. It looks like it's going to cross and it keeps widening out. So this one, based on the trend, if we see a run tomorrow, I would say this would gap up. Yeah, because the way it works is, see how we're sitting kind of near the 52-week high? And to get to the screen, I just tap on the arrow on the top right there. And the 52-week high is 224.59, but it's at 213. So if we have like a slightly green day tomorrow, to get the RSI just slightly below that overbought marker, and then on earnings day it gaps up, that would make this fit 100% what we've been playing. So after you look at the MACD and you verify that this pattern here going into earnings is on the uptrend for a call, and then what you would do is on earnings day you sell the call at the open or at the high point of the day if you can, and then try to buy the put at the low point of the day to play both sides. And if you're not comfortable doing the first part, then ignore everything I've said so far other than the earnings gap that we just saw. So if you're not comfortable with all that and you just want to play this down gap, then what you would do is wait until after earnings tomorrow, or the 7th, I mean, to buy your puts. You want to wait until it gaps, if it does. I'm pretty sure it will. So once you got all that, then we go to the options chain, right? And well, wait, let's see where the gap was first of all. I should not have gotten baked before I did this. I apologize in advance. Where was I just on? Damn it, I forgot. Oh, no. No, which one was it? Okay, I remember that. It was the 7th. The 7th, bro. The 7th. Are they hiding it from me? AYI. Okay, Jesus Christ. I thought it started with an S. Don't do drugs, kids. Anyways, okay. So, there's a gap. Obviously, there's a gap. We want to play the downside, but since we have earnings coming up soon, it could gap up again. Like, this looks just like CN did, kind of. But the way it works is the exhaustion gaps, by definition, the trend exhausts by gapping. So if the trend is a clear uptrend into earnings, that's what you want to see. Except for DCT, because of the last earnings. But the more you play this, the more you start to see these patterns. So again, once you see the gap, if you don't want to try to catch it, if you see a gap like this, wait until the earnings, see where it gaps again, and then after that earnings, like after this earnings, go into the options chain and look at the open interest to see if it matches what you're seeing on the gap. So what you're looking for in here, there's like nothing in here. Jesus Christ, maybe that'll change. There's so very easy to tell when there's nothing. So you got calls at the money at 417 open interest for January 22nd. Go to puts. This is our support. There's puts down all the way to 175. 80 open interest. So now what we do is we go to maximumpain.org. AYI. Don't forget again, bro. AYI. And we look at max pain. Oh, shit. All right, Dan, boy. Well, there you go. See, and then that's a confirmation right there. And then we go here. So maybe this one doesn't gap up, or maybe it does. Who knows? We'll have to wait. Tomorrow's going to be critical for this one to see if it's going to gap or not. But anyways, so that's the max pain. There's not a lot of OI in here, but look at the IV. It's perfect. Perfect IV. That's what you want right there. So this one right here, I would consider a play. AYI, you just saw how we do it in real time on my phone. I just showed you. Hopefully I wasn't too retarded. Hopefully this made sense. That's literally all I do. And then when I want to buy it, so I'm going to try to buy this one if it looks like it's going to gap up on earnings, despite the max pain, because that's where it gets a little complicated trying to catch gaps, because you got to go against your own logic sometimes. But if it looks like that's what's going to do, I will plan on buying calls for this tomorrow at some point, likely on the low of the day. We may see a similar day to what we saw with DCT today, but again, the broader market did play a big picture, so we can't assume that. But despite that, whenever I want to buy this shit, what I do is I pick the strike that I want to buy in the money. This one's a little pricey if you're going to try to catch the gap. We're talking 980. So I understand if you want to go out of the money, but just keep in mind, if you go out of the money, if it goes against you, that risk is theta. That theta burn will hurt. So, in my opinion, it's worth paying the extra dough to get the extra protection. But again, you're your own person. Make your own call. If you want to get the out of the money ones, you can go. What was max pain again? 190. So max pain at 190 for puts. If you wanted to wait it out and play the put game, we're talking 175. You know, with low IV. So that's the thing. If you can go, I mean, the lower the IV is out of the money, the more safer it is. So you notice that in most like GME, if you go to the bottom, it's like over 150, 160%. 40 out of the money is not bad. So, you know, do what you want. You know, you're your own person. If you want to go out of the money, that's fine, but just keep in mind it is riskier. But since all this checks out, now what we're going to do is we're going to go to the chart now. And on this chart setting, we just scroll down. That's it. Scroll down. You can do everything, like you can find the gap, check the MACD, and then scroll down to check the volume analysis all in one screen. It's amazing. Now, is Webull perfect? No. But scroll down, we look at the volume analysis. What do we see? We see that 213.63 was the biggest volume analysis of the day, or the biggest price that shares were bought today or sold. So we know that majority of it was bought volume. If you want to dig on it further, you can click on it and you can actually go in here and look at the exact amount bought and sold versus held, or grayed out, neutral. But you see here there's a lot of buy volume, right, on some of these prices. But then again, on some of them, there's more sell volume. So you just want to do a quick scan. Like, I don't spend much time here at all. I just do a quick scan. Look at the first, maybe you get 40. I don't even think you need all 40. I think 20 may be more efficient to get a clearer picture. So, and this is what you would expect before earnings. It's kind of just flat, right? So tomorrow, what you want to do is you want to open this up and just pay attention to it. Just to see what it's doing. Let's go look at AGLE. It usually has a weird one. Yeah, see, AGLE is a little bit more, you can see what they're trying to do. There's green, there's red, there's neutral. There's a lot of neutral. Lots of neutral here. It's a sentiment view, basically. You just get the overall sentiment, and then it does add it up and total it out for you here. You can see here that the most of it was neutral. So, crazy shit. Just ride those gaps. Like plays like this, Aggle, I mean, shit, just get long calls and this shit will fill. It's got to. It's got to. And I think we caught these historic gaps. These are historic gaps we're playing here, people. So I'm pretty positive they're going to have to fill sooner than later. And you can play off these multiple times. Keep that in mind. But yeah, you saw everything to do. And then, once you look at the volume analysis and confirm that it's you're looking to buy puts, if you confirm that it's looking pretty bullish, then I would wait and hold off. If it's looking bearish, go ahead and buy. And then you wait until this 1 minute MACD, god dang it, cycle, like right there. You see that right there? That's when you want to consider buying a put. Is when these lines, I don't care about the signal, the MACD, histogram, none of that shit. The only thing that I look at on this screen is where those two lines are and if they're about to cross. That right there is pretty damn close to buying puts. So and that's how you would day trade these. But that's not to say it could flip right back, 3 minutes later, like right here. Like you flipped green, then it flipped back red 2 minutes later. That could happen also. You just got to watch it. I mean, the best advice I can give you if you're struggling is just to use your eyes and just study this gamified tool they give you. It's a tool. I mean, that you have everything. You have options, news, analysis, company, profile. I got institutional ownership at 91. Like, I have everything easily accessible in like 30 seconds or less. I can get to all of it. Analysis, short interest, right there. Boom. Days to cover. All of it. Their short interest is actually going up. Hell yeah, that's what I want to see. But anyways, you have a good one. My computer broke, so yeah. I can't make videos on my computer for now. But I got my phone, which may actually be better because that's what I trade from. So anyways.